space at least for next 2 or 3 hours, or at least till the time the IP data is not out. Let's touch base with corporates now. Sunil Duggal, Chief Executive Officer of Dabur India, joins us now. Sunil, good morning. Thank you for joining us. Sunil, first let's talk about the growth for the Indian FMCG industry and then for the Dabur. What is the total volume growth Dabur is looking at for this fiscal? Because till now you've been giving a conservative guidance.
No changes in guidance as far as the revenue part is concerned. We're still looking at volume growth in the region of 10%. And I don't think anything has changed materially for us to change that estimate.
So, Mr. Duggal, are you looking at increasing discount, drive volume growth?
Probably not. Survival of inflation, and that's a cause of concern. So there could be pressure on margins, which obviously would mean that we step down promotions and offers a little bit and perhaps even go up further in prices. Too early to call. We'll see the situation towards the end of this month, early next month, and then seeing the outlook on inflation, we'll take appropriate steps to fix up the advertising spends or to increase prices or whatever else it takes.
Sunil, so let's talk about specifics now. Packet juice as a product still contributes a sizable chunk of your revenue. Are you witnessing any revival there, and tell us more about the volume growth which you expect from this segment?
Well, the beverage piece has been growing well ahead of the other segments over the last 5 or 6 quarters. And while we do believe that the growth will be ahead of the rest of the business, we are not likely to see the same 25-30% growth which we saw. So growth would moderate a little bit on a high base, as well as the fact that it is a somewhat discretionary product and could have some downsides in an economic downturn. But we still would see a 20% kind of revenue growth coming from beverages. At least that's what we hope. The bigger concern in beverages is the margin impact, because most of the content is imported, and largely on account of the rupee depreciation, there has been a lot of pressure on margins. So we'll have to navigate that space in terms of margin management, and I think that is a bigger challenge rather than the demand side.
So Sunil, has the local competition come back in the oil business, and tell us if you're finding it difficult to increase prices because of that?
No, I think our prices are high, and it's not really so much on account of competition. It's really a concern that too frequent price increases could hurt consumer sentiment and demand. Because we have taken our prices in hair oils considerably last year. We hadn't taken down prices, even though the inflation this year was much less. So the prices remain at a pretty high pitch, and we believe that at the current pricing level, there is adequate amount of demand to satisfy our internal estimates. But further sharp increases could be an issue which we would like to avoid.
Neil, we also saw a big turnaround in the shampoo space for Dabur for the quarter gone by. So what led to the turnaround, and do you see growth and momentum picking up for Dabur in the shampoo category in the coming quarters?
We believe so. I think the shampoo business, the shampoo brand is extremely resilient. We went through a bit of a bad patch in the last year, but we've come out of it very smartly. So the volume growths are extremely aggressive. We've reworked our mix. And we believe that the outlook for shampoo is extremely bright, at least in the near term.
So how is the demand looking now at a time when inflation rates are not really easing?
Well, obviously for the discretionary type of items, there has been some slowdown in demand. But for staples, and most of our products come under that category, as I mentioned earlier, we are seeing no slowdown. The demand seems to be robust. But I think the big challenge would be in the third quarter, which is really the biggest quarter in terms of overall offtake. And that's when consumer sentiment would perhaps play a major role in driving demand. And we do believe that while demand is likely to remain robust, there is a finite possibility that there would be some petering off, some cooling off of demand. We hope that won't happen, but I wouldn't rule out the possibility.
Sunil, also tell us about the current pricing scenario. Do we expect any revisions in current prices or MRP prices going forward?
Probably yes. I don't think they would be as steep and as secular as what we did last year, but we would be looking at price increases. I think the inflation scenario almost compels us to do that. And the rupee we expect would likely to rule at the current levels, so which would further put pressure on margins, necessitating some price increases.
The company has been given, Sunil, a fairly conservative guidance. What is the reason for the same? Your quarterly numbers have been above market estimates, as well as your stock has given a good 30% return on a year-to-date basis. So what is really the message that you're giving out to investors by a conservative guidance?
I think we were being a little circumspect in the earlier parts of this quarter because the monsoon outlook was pretty grim at that point in time. So a conservative outlook was the prudent thing to do. As we speak now, with the revival of monsoon, we believe that the demand side is now becoming a little bit more attractive, more robust than